My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramerica. I'll do it, my friends. I'm just trying to make you a little money. My job, not just entertain, but to put it all in context. So call me at 1-800-743-CNBC. Tweet me, Jim Cramer. Not all rallies are created equal. Some are just plain better than others. Today's move, with the Dow gaining 254 points, this will be climbing 0.87%, and the Nasdaq pole vaulting 1.11%, actually did feel better than the kind of run-of-the-mill rally because it was as broad-based as you can get. And that's a terrific sign of staying power. But we had a real thicket to get through, so let's parse what happened today and figure out if the market can keep rebounding, because it's not clear to me that it will. First, we came in with a negative oscillator reading, minus 5.64%. Not as negative as it was a couple days before, but still a coiled spring. Now, you know I follow the S&P oscillator religiously. When you have many down days, you can almost always count on a bounce. I like to look at a year's worth of the oscillator. We bounced off oversold levels in August and twice in October of last year at almost the exact same readings. And then the market just roared until this 3-week sell-off. It's reassuring that the market can still bounce, isn't it? Because it means that there's some rationality to things, but not every oversold bounce has staying power. The oversold oscillator readings in August and in early October did not, in retrospect, indicate a true bottom. As a matter of fact, things went right back to being awful. So maybe it is a bit of cold comfort. Second, the Nasdaq 100 started out marginally higher today. Then again, at 9:48, it plummeted, dropping from 17,182 to 17,010. It then bottomed at 11:15, very mysteriously, frankly, and started its way up. This move did, though, break a key pattern that we've had for weeks, when the market opens up, then starts going down, and then stays down. Nothing in particular happened to turn things around, but the bond market seemed tame. Oil wasn't running. Unusual for this market, isn't it? The fact is the buyers came in because stocks got low enough to tempt them. The S&P never went negative, but remember, the real selling's carnage has been in the Nasdaq. Third, this was really interesting. The market shrugged off the sudden reversal of a gigantic company, of Verizon, after an up opening. The giant telco company reported in the early morning the stock initially rallied 3% in the before market trading. Then when the regular market bell rang, the stock still opened up, but it was appreciably down from those lofty pre-market levels. Verizon then experienced a sickening decline as we realized there were continued customer losses and the cash flow disappointed. Almost every line item came in weaker. There could have been a lot of negative read-throughs from Verizon. Could be a sign of weakness for Apple or the broader consumer, but none of those came up. If the market were looking for reasons to sell off, Verizon stock falling 4.6% would have been an easy one. But it didn't happen. Absence of a negative. Fourth, when Tesla goes down, it tends to hurt everything water-related. Today, though, Tesla's price cuts $2,000 off the price of 3 of their 5 models, and it's continued travails around layoffs and executive departures actually produced rallies among its big competitors, Ford and GM. Ford actually led the entire S&P with a 6% gain. Why? The takeaway here was that people still want cars. They just don't want Teslas or even EVs in general. We own Ford for the Charitable Trust. And by the way, you can join the CNBC Investing Club ahead of Wednesday's big club meeting to find out more. That's a noon meeting. Now, the long story short is Ford has the best non-electric lineup, including hybrids, popular internal combustion engines, and, yes, the F-150 truck line, the greatest selling truck line in history. And that's where the money is going. Hey, by the way, Ford's one of the cheapest stocks in the entire S&P 500, even after today. When you see that kind of action, it means that markets are willing to buy cheap, even if it also means it's selling dear. Fifth, speaking of buying cheap, the financials just keep running. Have you seen that? It is a very impressive move. You can see the stocks of J.P. Morgan and Bank of America, 2 laggards, they've come roaring back, but nothing comes close to American Express. With a 13-point advance last Friday off a quarter that was initially panned as a disappointment before people reassessed in the stock on fire. You know, it's almost up another $2 today. 6, Nvidia, the stock bounced. Now, listen to this. Don't laugh. This company has lost more than $300 billion in market capitalization from the top, almost a straight line. It's been a hideous stock, as any decline I can recall, frankly, down 10% alone on Friday. Now, the stock mounted in advance today, but not enough to erase Friday's gains. Nvidia's gone from being the star of the show to being the goat of the game, and I'm not talking about the greatest of all time. Of course, we've learned from multiple pieces of research today that Nvidia, the business, is doing quite well. Now, I think the stock finally got cheap enough to start tempting people. I don't want to make too much of Nvidia because all high multiple stocks came roaring back today. But if Nvidia couldn't rally today, it would have been a horrible sign. Luckily, it didn't happen. I don't know how much staying power Nvidia stock is going to have, though, tomorrow, because after the close tonight, Cadence, a very close partner of Nvidia, guided down for both sales and earnings. And that is surprisingly bad.
The House of Pain.
I need to dig deeper in this one to see the impact on Nvidia because we got multiple reads today and Nvidia's doing quite well. I don't get it. 7,000 representatives gave Meta and Google a lift by banning TikTok. We don't know what the Senate will do, but it's pretty darn good news for our companies. Now, Mark Zuckerberg did a good job designing this reel as a viable TikTok competitor. He was involved with it, apparently, at every step of the way. And that will cause his numbers to jump. So, I got to tell you, that stock could be very interesting again, even though reports this week. Eighth and final development, Salesforce was talking to Informatica about buying the enterprise software company for about about $12 billion. Some argue this potential purchase price would demonstrate a lack of discipline, and you get beaten up for it. Salesforce was going back to its old ways, spending like a drunken sailor. Turns out the deal's not happening. The company's much more disciplined than the critics thought, so the stock jumped. Salesforce could have been crushed if it bought Informatica. Now, there are a bunch of counters to all these positives. First, if the trusted oscillator is trusted, and it should be, that means we're going to go up and then down again, then up again, then down again before we reach a good level for an advance. Looks like a W. We could rally for 10 days before we get punished, or even less, but the punishment will come. I think we need to be ready for that. So after a couple days, you got to want to reposition with more cash. I will explain that on Wednesday's club meeting, too, because we're going to do that. Second, we have a bunch of bond auctions this week. I am very concerned that we can't get through the week without a bond sell-off. The bonds are very much in control here. More on that later. And the only reason we could bounce today is that we had a tame bond market. I'd be stunned if bonds don't move much down in price and up in yield into these three auctions. It's a 2-year, it's a 5-year, it's a 7-year, all of which are abnormally large. Now, look, if we do get through those auctions and we get a good personal consumption expenditures number on Friday, then we deserve to keep going higher. But I think it's a mighty tough gauntlet to run through. Kind of like that one with Clint Eastwood, very hard. Third, today's bounce might just be because nothing happened in the Middle East this week in absence of a negative. I don't think that'll continue to be the case. If you want to bet on peace in the Middle East, be my guest, but history says that's a bad wager. Finally, remember that if a stock goes down 5% and then goes up 5%, you do not get back to even though a lot of people seem to be confusing that. You're still down. We had a lot of stocks that went down a great deal last week. They're going to have to climb back the tree a great deal in order to be where they are. So if you're down 5%, you got to go back a little more than 5%. I think it's a tall order. Another reason why the oscillator reading is a bit of cold cover. So let me give you the bottom line here. Very mixed picture. I think the positives do outweigh the negatives, at least for this moment. History, however, says it won't last, so be ready for another decline. Raise some cash. When is it going to go back down? I don't know. Probably should go up first. But there's just a lot to worry about, and I don't want you to think or get complacent. Let's go to Sharon in Minnesota. Sharon.
Oh, yeah, Jim. I'm a club member, and I have a question about ELF. I know that Ultra got hit, but do you think that ELF is a buy, hold, or a sell?
Okay, so ELF is a high multiple stock that didn't used to be, and yet it was up today. So first of all, Sharon, thank you for being a member of the club. I hope to see you on the Wednesday club meeting. But ELF is good. ELF is... other than the chart pattern, which is not that good. But we spoke to Tarang Amin just, I don't know, less than 10 days ago, and things are really, really strong. So I would like you to be in that stock. Let's go to Trey in Texas. Trey.
Jim, I rage canceled my auto policy on notice of an 8% premium increase, only to discover a lapse in coverage can be far more detrimental. My new 90% higher rate, paired with effective anger resolution classes, has really put a strain on my budget. As insurance companies are doing far better than I am, I wanted to see if you think I should buy Progressive here and share the
Yes, the answer is absolutely yes. And not just because of the anger management thing, which is really something I don't know a thing about. You'd have to help me with that. But I will tell you this, the Progressive's doing incredibly well. By the way, they are the most AI-oriented of all the insurers. Interesting, isn't it? They price really, really well. Now, all right, listen to me. I think the positive for the moment in this market outweigh the negatives, although that Cadence took my breath away. Remember, they are the partner of Nvidia. But history says it won't last anyway. Mad Money tonight. What's driving the Nasdaq's recent downturn, including some Supermicro's 23% drop on Friday? I'm going to give you my take. I think it's going to surprise you. Then Netflix. No chill. After the company's post-earnings decline, I'm examining the bull and the bear case for the company. And gold just had its worst day since February of 2023. But after this year's run-up, is it time to consider the yellow metal? I'm going to sit down with the CEO of Barrick Gold. The stock's not doing that well, I know. To maybe make a little sense of the action. How about that? So stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.